Consumer prices here in Singapore continued to push higher in November. The headline inflation rate rose to 3.8%. That's its highest in more than 8 years, driven by higher private transport costs. Meantime, core inflation, which excludes accommodation and private transport costs, also stayed at a 3-year high, reaching 1.6%. This was driven by an increase in prices of services and airfare. The exit of retailers under the open electricity market also meant that more households had to switch to providers charging at standard tariffs, which contributed to the rise in electricity costs. For the full year, the central bank now estimates core inflation to come in at 0.9% and headline inflation at 2.3%, up from about 2% previously. With global oil prices remaining elevated, one economist says it's likely that there will be another round of monetary policy tightening come April. With an improving economic outlook, he expects prices to push higher in 2022.
If we do assume that Singapore's growth is likely to expand into 2022 next year, this will likely mean better business prospects, better and stronger labour demand, which in turn would mean a tightening of the labour market for the next year. And this would translate into higher wages and higher inflation.